All right, gonna do a quick video on how I set up my charts before I start trading. So I'm not gonna dive into the weekly or daily charts right now. We kind of know where they're at. The daily you should just monitor once a day just to see where we're headed and to see any higher time frame points of interest. Weekly obviously moves slower, so we don't need to check that as often. Once you have those areas marked on the weekly, they should be good for, you know, a decent amount of time. So what I'm going to do is, let's say this is what's left over from my previous trading session. I'm going to start off on the 4 hour chart and just quickly look at how everything's forming on the 4 hour chart. So what I'm going to do is I'm going to start getting rid of stuff and start with a clean slate. So we'll get rid of that. We'll get rid of this fair value gap that's been closed in. And we got a bunch of little stuff in here. Daily fair value gap. I'm just going to keep that here for right now. And the daily volume imbalance. We got through that. Okay, so from here, um, I have some highs marked out, no big deal. And now I'm going to take my high of the week. Draw it out right there. Make sure the coordinates are lined up. Um, okay, high of week, top center. Perfect. Okay, so here's my previous swing low, which is equal lows. So I'm gonna mark that out. We got that as a point of interest, especially where prices went to. Okay. Swing low with equal lows. Okay, now I have that marked out. I'm just going to note this right now. This is a 4 hour fair value gap. That's really large. There's probably more fair value gaps within that one. So I don't really need to mark that out right now. We have this 4 hour fair value gap down here. Let's get rid of these consolidation lines that I drew. Don't need that. I am going to keep this sell side liquidity and this November 9th, 10th equal lows just in case. But if we get down to here, then yeah, we'll see. Just put this fair value gap in here. Okay. And I can label this. Let's go bottom center. 4 hour fair value. Okay. All right, let's go down to the 1 hour chart from here. Okay. Anything that I have on here that I can get rid of? All these old. So I have this high of the week, but I also mentally noted these equal highs right here, and it's so close to the high of the week that I feel like if it's pushing these equal highs, we're more than likely going to take out the high of the week. Going down to the 1 hour. Okay, we got sell side liquidity taken, sell side liquidity taken, daily fair value gap completely ran through, and it's gone below. And we noted these equal lows right here. Just going to move this to bottom. There we go. Okay. So I'm just kind of looking at this and I'm making sure that I've hit all my reference points. Um, Also, things that I like to take note of is there is an order block right in here, in this 4-hour fair value gap. So if we took this gap and we divided it in half, just do a GAN box. Let's switch it to ICT GAN box. Okay, if we were going to get consequent encroachment, okay, this order block price could come all the way down to the bottom of this candle and it hits the 50% of this fair value gap. So that's something that I just want to note over here and kind of take a like remember that mentally. So, and that gets just below these equal lows if it fills the whole thing. Now, I think that it's most likely already came down here pretty low, which is why these equal lows right here, but you never know. So I just make a little note over here. All right, 1-hour order block below this fair value gap. Okay, so I'm not going to mark that out right now. I don't like to make my charts too messy. I just kind of like to note the major things on these higher time frames. So again, multiple 1-hour fair value gaps. Okay, what I want to take note of though is this 1-hour order block right here, and this swing low, and this fair value gap associated with this swing low. Okay, so we'll do that on a 15-minute time frame. So then I just move down, and this is what I'm doing pretty much in the evening time as the Asian session is playing along. I'm looking at this stuff. I'm setting up my chart. Okay, we'll get rid of this because we made a big move. All right, get rid of these. Clean up the chart. Okay, so now we're getting down into the 15-minute time frame. Okay, so notice on the 1-hour and the 4-hour, we had a swing low, which we marked right here, which is at the top of this fair value gap. We'll get rid of this. This was a daily, something from the daily chart. We'll get rid of it for right now. So we have this swing low and we have this swing high. Okay. So what is that given us? That has now given us a range. So if I draw a fib on here, okay, I'm just checking to see where are the levels at that we're at. If this was our range and this was a retracement down, if we're going to go back up, which we might not, but I like to kind of go through the two scenarios in my head, which either we're going up or we're continuing down further. So right now we're at the 62%, 79%, right in that area right here. So I'm just going to take that fib, make a mental note that we're right there. And we'll get rid of that. We can draw a GAN box just to give us our premium and discount areas. So equilibrium in this area. It's right here. And if you ever do this frequently, look at where price kind of made its little consolidation before starting to move down lower, right at equilibrium. And so you'll notice that when you run these PD arrays in your ranges, that price likes to consolidate around equilibrium because it's distributing. Just came from this premium area up here, moving down. It's getting rid of some of its orders and it's distributing on its way down. Okay, so let's open this up a little more. Okay, so now I'm looking at, I don't know if we made a swing low yet. I'll usually check right around midnight when London opens to see where we're at and how London reacts to the Asian session. But right now we're consolidating. I have this fair value gap marked right here on the 15-minute chart. And we have this swing low right here. So we came down, swing high, swing low, swing high, and then a swing low. So this to me is going to be a point of interest just because this can act as a breaker. This is unbalanced. So if we came back and we filled in this fair value gap, this could be used as a breaker, which balances also gets this area balanced, and we could move back down. I like to look at these kinds of things right here, like how do these wicks line up? Are there any relative equal highs on these wicks where price is going to want to come up just above it, just because we have this gap and this swing low right here. So I'm just analyzing what the chart is giving me from the previous day and what are possible points of interest that price is going to want to be drawn to take out liquidity, either buy side liquidity or sell side liquidity. So this is something that's possible, but who knows? Maybe it doesn't want to get up that high. Maybe we just get up into here and we move down, or we'll see. We'll see how the London session plays out. I'm not really going to mark any of these gaps yet. Again, we know this is a big 4-hour fair value gap. This whole thing, it's all unbalanced. It's a CB. I can document it. Okay, so we got our CB. And then I would move down to the 5-minute chart. All right. Okay. So again, this swing low, we have a 5-minute fair value gap that lines up with this swing low. To me, that's a nice rejection point of interest. Here's something else. So on the 5-minute chart, these are almost relative equal highs, and there's a gap in here. This order block could be used as a rejection point. That's possible. So let me just mark this. And really what I'm doing is I'm just marking things on my chart to draw attention to possible areas of interest of where price is going to want to be drawn to. I always go back and analyze why price wicked at a certain level or why it touched a certain level and rejected. And I always look back and see why did it get to right there. And I look at I draw a line on it and I look at everything around it. So just kind of expand this. Let's take a Asian session. Seems like it's staying in this range. So let's just take a a standard deviation of it, and we can leave it right there. All right, switch this to standard deviation. Okay. And so now I look at my standard deviation tool. Okay, where does price want to go? So we hit this daily fair value gap. We did not reject. We blew right through it, and we've continued down below it. So if I was, like ICT says, if I was had a gun to my head and I had to make a decision where we were going to go, I'm thinking that we're probably going to head down some more. So then I have these marked below here for our fair value gap. Okay, so with the standard deviation tool, let's just flip this. Gosh dang it. There we go. Let's go to settings. And this is what I do when I go to my settings. I don't need a 3 box, but I can go with -4, see where that lands me. Okay, so one standard deviation up puts me right into this 15-minute fair value gap and takes me right perfectly with this. So that kind of stuff is pertinent to me because the range that the Asian session has created and using the standard deviation tool along with it has now given me a point of interest that matches up with something that I've already identified by going through the charts. So this is another area of confluence that more than likely we're going to get up into this area. If we're looking at our power of 3, what do I want to see? Well, if we're looking to make a move down, we have open, consolidates, manipulate up, and come back down. And who knows how far down we're going to go. We could get into here. But that's something that I would look for, and that's what I would have available as one of my possible scenarios to watch out for that aligning. It doesn't mean that it's going to happen, but I like to give myself, like I said, a few scenarios as to what could possibly occur. Everything to me is lining up that we continue moving down. But again, I don't like to marry an idea because I don't want to get stuck if it goes against my idea, and I'm so set on it happening that now I'm forcing trades against the bias. I've done that in the past and I've lost every time, and so I try not to repeat those same mistakes. All right, so that's pretty much it. So now I'm set up for tomorrow. I have everything um, marked out that I want to mark out. I will probably wait till I'll probably check again at midnight and just see where we're at with I'm sorry, midnight Pacific Standard Time, so London Open. 3 a.m. is midnight over here in California, so I kind of check right around here again and see what London's doing at Open, see what the Asian session has done, and then when I get up in the morning, if I see that London's taken out Asian highs or manipulated up, then when I get up, I'm looking for short entries. So here's another thing that I would note is right down here we have equal lows. So the Asian lows created a smooth bottom. So that's just going to be another point of interest. Let's move that right there. a lot of times I don't mark stuff like that because it's easy for me to remember. And it's like I'm already figuring that these are going to get taken out. But there you go, we'll just mark those stuff. So now we have all our points of interest. All right, and that's an example of how I start from the 4-hour chart. And like I said, I didn't want to get too deep into the daily and weekly. I think we've gone over those enough. But this is from the 4-hour down to the 5-minute of how I set my charts up, what I'm looking for, and the different tools that I use to just give me ideas of where we're at in the PD array, where we came from, where we're headed, and some multiple confluence points of interest that I think price will be drawn to. All right, hope this was helpful, and you guys